A pleasant day, everybody. We are the group 4 and we will be reporting common size or vertical analysis on balance sheet of Johnson and Johnson and subsidiaries.
Johnson & Johnson subsidiaries consolidated balance sheets at January 2, 2022 and January 3, 2021. Dollars in millions, except shares and per share amounts, note 1. So to get the common size of the year 2020, we have here current assets. We have cash and cash equivalents, notes 1 and 2. We have here 13,985. We will divide it to the total assets of 174,894. So after dividing it, we will multiply the total to 100. So we now have the 8%. So next is the marketable securities, notes 1 and 2. We have 11,200. We will divide it to the total assets, and after getting the total, we will multiply it to 100 so we can get 6.40%. So next is accounts receivable trade less allowances for doubtful accounts. We have here 13,576. We will divide it to the total assets of 174,894. So after getting the total, we will multiply it to 100 so we can get the 7.76%. Next is the inventories, notes 1 and 3. We have here 9,344. We will divide it to the total assets of 174,894. So after getting the total, we will multiply it to 100 so we can get 5.34%. Next is the prepaid expenses and other receivables. We have here 3,132. We will divide it to the total assets of 174,894. So after getting the total, we will multiply it to 100 so we can get 1.79%. So next is the total current assets. We have here 51,237. We will divide it to the total assets of 174,894. After getting the total, we will again multiply it to 100. So 29.30%.
Yes, sir.
Next is the property, plant, and equipment. Notes 1 and 4. We have here 18,766. We will divide it to the total assets of 174,894. So after getting the total, we will multiply it to 100 so we can get 10.73%. Next is the intangible assets, notes 1 and 5. We have here 53,402. We will divide it to the total assets of 174,894. So after getting the total, we will multiply it to 100 so we can get 30.53%. Next is the goodwill, notes 1 and 5. We have here 36,393. We will divide it to the total assets of 174,894. And after getting the total, we will again multiply it to 100 so we can get 20.81%. Next is the deferred taxes on income, note 8. We have here 8,534. We will divide it to the total assets of 174,894. So after getting the total, we will multiply it to 100 so we can get 4.88%. Next is the other assets. We have 6,562. Divide it to the total assets of 174,894. And after getting the total, we will multiply it to 100 so we can get 3.75%.
Now, let's proceed to liabilities and shareholders' equity, still following the formula of vertical analysis or common size. The formula is the liabilities and shareholders' equity are divided by the total asset times 100%. Year 2020, incurred liabilities. Loans and notes payable is 2,631 divided by the total assets of 2020, which is 174,884 times 100% is 1.50%. The same method will be used in the following account titles. Accounts payable is 9,505 divided by 174,894 times 100% is 5.43%. Accrued liabilities 13,968 times divided by 174,894 times 100% is 7.99%. Accrued rebates, returns, and promotions is 11,513 divided by 174,894 times 100% is 6.58%. Accrued compensation and employees related obligations is 3,484 divided by 174,894 times 100% is 1.99%. Accrued taxes on income is 1,392 divided by 174,894 times 100% is 0.80%. The total current liabilities of 2020 is 42,493 divided by the total assets of 2020, 174,894 times 100% is 24.30%. Long-term debt is 32,635 divided by 174,884 times 100% is 18.66%. Deferred taxes on income is 7,214 divided by 174,884 times 100% is 4.12%. Employee-related obligations is 10,771 divided by 174,894 times 100% is 6.16%. Long-term taxes payable is 6,559 divided by 174,894 times 100% is 3.75%. Other liabilities 11,944 divided by 174,894 times 100% is 6.83%. Total liabilities 111,616 divided by the total assets 174,894 times 100% is 63.82%. In shareholders' equity of 2020, the common stock par value $1 per share is authorized 4,320,000,000 shares, issued 3,119,843 shares is 3,120 divided by the total assets 174,894 times 100% is 1.78%. Accumulated other comprehensive income, which is loss, is 15,242 divided by 174,894 times 100% is negative 8.71%. The retained earnings of 113,890 divided by 174,894 times 100% is 65.12%, and 101,768 divided by 174,894 times 100% is 58.19%. Last, common stock held in treasury at cost 490,878,000 shares and 487,331 shares is 38,490 divided by 174,894 times 100% is 22.01%. The total liabilities 111,616, and the total shareholders equity 63,278. The total liabilities and shareholders equity 174,894. Divide the total assets of 174,894 is 100%, which is equal.
Next is we're going to calculate the vertical analysis of the balance sheet for the year 2021. And we will use the vertical analysis equation, which is we're going to simply divide each line item by the base figure and multiply the result by 100. In the current asset section, we have cash and cash equivalents. $14,487 divided by the total assets of $182,018. Multiplied by 100 will get a result of 7.96%, rounded off to the two decimal points. Next is marketable securities, $17,121 divided by the total assets, $182,018, multiplied by 100, we will get 9.41%. Accounts receivable, trade less allowances for doubtful accounts. We have $15,283 divided by the total assets, $182,018, multiplied by 100, we will get 8.40%. Next is inventory, $10,387 divided by $182,018, multiplied by 100, we'll get 5.71%. Prepaid expenses and other receivables, $3,701 divided by $182,018, multiplied by 100, we'll get 2.3%. And for the total current assets, $60,979 divided by $182,018 multiplied by 100 will get 33.50%, or we simply add all the items of the current assets. Next is for the non-current assets. We have property, plant, and equipment net, $18,962 divided by $182,018 multiplied by 100 will get 10.42%. Intangible assets net, $46,392 divided by $182,018 multiplied by 100 will get $25.49. Goodwill, $35,246 divided by $182,018 multiplied by 100 will get 19.36%. Deferred tax on income, $10,223 divided by $182,018 multiplied by 100 will get 5.62%. And other assets, $10,216 divided by $182,018 multiplied by 100 will get 5.61%. And then for the total assets, we will simply add the total percentage of the current assets, which is 33.50%, and the percentage in the items in the non-current assets, and we'll get a sum of 100%. The sum for the total assets is 100% because, again, the total assets is our base figure in computing for the vertical analysis of the balance sheet.
Next is we're going to compute for the liabilities and shareholders' equity for 2021, the common size or the vertical analysis. So, in each line item of liability and shareholders' equity, we're going to divide it to the total asset multiplied by 100 and then equals to the result. First is current liabilities. Loans and notes payable, 2021, 3,766 divided by the total asset, 182,018 multiplied by 100. The result is 2.07. For accounts payable, we have here 11,055 divided by total asset of 182,018 multiplied by 100. The result will be 6.07%. We have here accrued liabilities, which is 13,612 divided by 182,018 multiplied by 100 is equals to 7.48%. For accrued rebates, returns, and promotion, we have here 12,095 divided by total asset of 182,018 multiplied by 100 is equals to 6.64%. Accrued compensation and employee-related obligations is 3,586 divided by total asset of 182,018 multiplied it by 100. The result will be 1.97%. For accrued tax on income, we have here 1,112 and divided to total asset of 182,018, multiply it to 100 and then round it off in two decimal place. We have here 0.61%. Then the total current liabilities will be 45,226 for 2021. We're going to divide it into total asset of 182,018 multiplied by 100. Then the result will be 24.85%. We can also add all the line items in the liability, the current liability, and the result will be 45,226. And as for the rate, we're going to also add 2.07%, 6.07%, 7.48%, 6.64%, 1.97%, 0.61%. Then the total current liabilities for the percentage of 2021 will be 24.85%. Next, we have here non-current liabilities. First is long-term debt. For 2021, we have here 29,985 divided by the total asset of 182,018 multiplied by 100. The result will be 16.47% rounded off to two decimal places. For deferred tax on income, we have here 7,487 divided by 182,018 multiplied by 100. The result will be 4.11%. For employee-related obligations, we have here 8,898 divided by 182,018 multiplied by 100. Then the result will be 4.89%. For long-term tax payable, we have here 5,713 divided by 182,018 multiplied by 100 is equals to 3.14%. For other liabilities, we have here 10,686 divided by 182,018 multiplied by 100. Then the result will be 5.87%. The total liabilities is 107,995. We're going to divide it to the total asset of 182,018 multiplied by 100. Then the result is 59.33% for 2021. We could also add all the percentages of non-current liabilities and current liabilities. Then we will also have the result of 59.33%. Moving on, we have here shareholders' equity. Same equation applies where each line item of shareholders' equity is divided to the total asset, then is equals to the result. First, for common stock, we have here 3,120 divided by 182,018 multiplied by 100. The result will be 1.71%. Next is accumulated other comprehensive income, which is loss. We have here 13,058 loss divided by 182,000 18 multiplied by 100 is equals to negative 7.17%. Next is the retained earnings. We have here 123,060 divided by 182,018 multiplied by 100. The result will be 67.61%. We also have here the subtotal. We're going to add 3,120 for 2021, then deduct the loss of 13,058, add 123,060, and then the result will be 113,122. As for the rate, we're going to divide 113,122 to the total asset of 182,018 multiplied by 100 is equals to 62.15%. We could also add the 1.71%, deduct it by negative 7.17%, add 67.61%, then we will have the result 62.15%. Since we already have the subtotal for 2021, which is 113,122, we're going to less the common stock held in treasury at cost, which is 39,099. The result will be 74,023. As for the rate, we already have the subtotal for the rate, which is 62.15%. We're going to less the common stock held in treasury at cost in percentage, which is 21.48. Then the result will be 40.67%. Or we could also divide 74,023 to the total asset of 182,018 multiplied by 100. Then we will get the 40.67%, which is for the total shareholders' equity. Given that we already have the total shareholders' equity of 74,023, let's add it to the total liabilities of 107,995. The result of the total liability in shareholders' equity is 182,018. As for the percentage, we are also going to add the total liabilities in percentage, which is 59.33%, to the total shareholders' equity, which is 40.67%. The result of the total liabilities in shareholders' equity is 100%. Since this is a balance sheet, we are able to tell if our answers are correct if we're going to look at the total asset if it is equal to the total liabilities in shareholders' equity. Looking at the total asset, we have here 182,018, and looking at the total liabilities in shareholders' equity, which is 182,018, it is equal and balanced, therefore it is correct. As for the percentage, we are going to look at the 2021. The total asset percentage is 100%. And as for the total liabilities in shareholders' equity, the percentage of 2021 is also 100%. Both are equal or balanced, therefore it is correct. Same goes to 2020, where the total asset of 174,894 is equals to the total liabilities in shareholders' equity, which is 174,894. And for the total asset percentage, both of it is 100%.
I am Anne-Marie Bidaw Lawson, and I was assigned to convey for the interpretation and the common-sized or vertical analysis of the balance sheet of Johnson & Johnson and subsidiaries. So, my group mates have already discussed about how to use a vertical analysis, and it is just simply we will focus only on the total assets as our base, and you will use any accounts divided by the total assets. So we will have to compare the datas from 2020 and 2021. So first off, let's focus for the first accounts or the assets, particularly or specifically current assets. In the current asset portion, there has been a decrease in cash and cash equivalents, which is 8% to 7.96% in the current year. So, last 2020, our cash and cash equivalents was 8%. So, it was higher than the current year, which is the 2021. So, there has been a decrease. Nonetheless, the total current assets, so let's focus for the total current assets percentage. The total current assets increased this year with the percentage rate from 29.30% to 33.50%, which has a 4.20% difference and an increased rate because of the increase in the marketable securities. So, next off is intangible asset, net asset, and goodwill accounts. This decreased this year by 5.05%, which led to a decrease in the total non-current assets. But their decline didn't affect the fact that there has been an increase in total current assets in the year 2021 of Johnson & Johnson's Statement of Financial Position Report. So that is all about the total assets. Let's go to the liability section. In the liability section, there was a minimal increase in the current liabilities. Long-term debt drops from 18.66%. So that's fine. So please refer to the table. Long-term debt drops from 18.66% to 16.47% in the year 2021, which has a difference of negative 2.19%. The liabilities from the prior year are higher than those from the current period, which dropped from 63.82% to 59.33%, a 4.49 difference. If the total liabilities decrease, cash flow also decreases. In the equity part, despite the irregularities of either the increase or decrease of the accounts, it yields an increase in the current year's shareholders' equity, which results in a 4.49% difference similar to the total liabilities. Total liabilities decreased by negative 4.49%, and total shareholders' equity increased by 4.49%. When stockholders' equity rises, it may indicate growth in the company's profits. A higher shareholder equity ratio is desirable since it indicates that a higher proportion of assets are financed using the shareholders' equity rather than borrowed money. The company's performance is outstanding as it successfully made the difference from the preceding year when we utilized vertical analysis. The increase in total assets and equity combined with a lower liability rate satisfies the need to ensure the company's excellent usage of resources and financial management. Therefore, Johnson & Johnson earned more this year than in 2020, which resulted in great progress and wealth. This only means that their financial managers are efficient and effective in their roles. So that is how we interpret the vertical analysis after using it.
Well, that is all for our report today. Thank you for listening. I hope you learned something, especially on how to compute the vertical analysis or the common size of a specific entity so that you can utilize this to analyze the company's performance or its profitability. Again, thank you and goodbye.